Maverick. Noun, unusual person. A visionary, leader, go-getter, an independent thinker. They see the vision for their life and pull that future towards them with an unyielding belief that things can and must be better. They achieve what most won't. Innovative, influential, daring, and direct, with a remarkably high tolerance for taking calculated risk. A foe to the status quo. This is Passive Real Estate Investing with Mavericks. Your host, Neil Timmins, has been involved with over $300 million in real estate transactions. He's a published author, commercial property investor, and real estate syndicator. This show is for those who want to learn how to earn passive income through real estate investing. Now, here's your host, Neil Timmins.
On this episode of Passive Real Estate Investing with Mavericks, I sit down with Krystle Simpson to uncover how to trade up in apartments. Welcome to Passive Real Estate Investing with Mavericks, where we provide actionable steps for you to grow your passive income and become job optional. During today's episode, you're going to get to discover how to trade up when it comes to apartments. For those of you who are new, I'm your host, Neil Timmins, and I love passive income from real estate. Now, before I introduce you to today's Maverick, I want to make a request that if any point you like what you hear, will give us a thumbs up or subscribe to the show to never miss an episode. And if you love what you hear, give us a written review. Plus, be sure to take a look at the description of this episode, as we packed it with thousands of dollars in free resources. Now, today, we've got the privilege to learn from a person who's got 20 years experience in real estate and finance. Prior to her career in real estate investing, she was a mortgage broker. And all of it changed when she figured out she was not in control of her destiny without owning real estate. I would describe today's Maverick as someone who's passionate about taking control of her financial life. Let me introduce you to today's Maverick, Krystle Simpson. Krystle, how are you?
Good. How are you? Thanks for having me on today.
I'm great. It's good to see you. Thanks for being here. I appreciate it. To say, for the audience's sake, tell me, who are you? Where are you from? What do you do?
Yeah, so I live in San Diego and I've been in real estate. I've actually been a mortgage broker for the last 20 years. So I got started when I was really young, when I was 19. So I've done mortgage brokerage for the last 20 years. Also, there was about a 5-year period where I owned a property management company. I never worked so hard in my life as when I owned that management company, but I learned a lot. I basically got a doctorate in real estate through that. So it was super helpful just as an investor, even helping people with loans and things like that. But because I wanted to have actual children, we ended up selling that business. I was working probably 70, 80 hours a week in that business. So me and my husband talked about it. It was like, if we don't want to have kids, we can't do this. There's no way. So we sold it in 2017. I stayed on with that company for about a year to help them with the transition. They were like a tech company out of the Bay Area called Mind, MYND. Anyways, I got out of that and then just focused solely on investing in apartments and mortgage brokerage. So that's what I've been doing since 2018, just 100% focused on that. We also have a podcast, which you actually came on last year at some point. Yeah, so we do that every week as well, but we're highly focused on our own investments, mortgage brokerage, and the podcast. Great podcast.
It was a lot of fun. You do a great job there. The two of you do. Yes. And thanks again for having me on. Tell me about the very first commercial deal. I'm lumping apartments in with all commercial, however you want to define it. Just tell me about the very first one that you bought.
The very first one I bought was in 2014 with partners. So we didn't have much cash. And I think, that's like the biggest barrier to entry for most people is that initial down payment. So what we did to get that money, we really didn't have much at all. So this is one of those things when people go, I don't have any money. What do I do? But a lot of people say I have $20,000 or $30,000. What do I do? Well, we bought a house with FHA financing, 3.5% down. We renovated it and lived in it for 2 years and went to the courthouse right before we sold it so we could take that $500,000 tax-free as a married couple. Super romantic, I know. But so from there, we had like that $500K from the sale of the house, which in San Diego still wasn't enough for a down payment for us to buy an apartment building by ourselves. So we ended up finding some partners made sure we were on the same page. Partnerships are like marriages and be very careful when you go into them. Yes. So our first 2 apartment deals we did with those partners. And while it wasn't the exact same business model that I wanted, for example, they were all about just do the lipstick and sell the deal quickly, just flip it. I would have done a little bit more, probably sold it for a little bit more, but we were aligned enough that it got us to our goal. So we flipped those first 2 deals together with that partner. And then after that, we had enough cash to go out on our own and just invest by ourselves.
Tell me about going out on your own, investing by yourself. Maybe tell me about your most recent deal.
So the most recent deal we bought was 12 units in like La Mesa area of San Diego. It's a nicer area. I would say it's kind of like a B- type of area. So really what I do is the one thing that I learned through the management company is that you kind of have to be adaptable to the market with your strategy. So there was a period where we were buying buildings, vacating them, doing the full interior, exterior rehab. But when I had kids, that just became a thing that was like, gosh, this is a lot of work and a lot of time. So maybe I need to shift my kind of risk tolerance to be a little bit more conservative and also just have more time for my family, where I couldn't dedicate all my nights and weekends and everything to these rehabs. So now when I look at a deal, I look for upside. And this deal has upside, but it's through raising rents. I don't have to fully vacate the whole building. I have a potential to add ADUs, which is really big in California right now. If your listeners don't know what that is, it's an accessory dwelling unit. It's just basically we have a lot less permitting and plans and rules that we have to go through in order to add additional units, since we are in a housing crisis. Like, we don't have enough inventory. Right. So the ADU game is really big here in California. I'm sure other states that allow it. So basically that's what we're looking for right now, is anything that has ADU opportunity and some upside without having to completely vacate the entire building. So that's kind of what we did with this most recent deal.
12 units. Did you end up bringing outside investors in, or is it the 2 of you?
Just us. And that is really my goal. So, we were talking about it a little bit before we went live, is, syndicating versus, flipping versus, long-term holding, whether you get partners or whatever. So my goal has always been freedom. I think most of us are looking for that. At least I am. I want time freedom and I want financial freedom for me and for my family. So I've looked into syndications. I was part of another syndication group, really dove into almost going into syndication. I was really going to do it. And I just thought at the end of the day, buying out of state, cap rates were super compressed at that time. It was like 2021. I thought, gosh, I could just buy in my own backyard in San Diego without having to fly all over the place and worry about management and all this kind of stuff. And then secondly, I was talking to one of my clients that owns about 2,000 units here himself in San Diego. And he was like, Krystle, why are you doing this? And, my husband starts going, tax benefits and this and that. And he's like, no. Why are you doing this? And I was like, freedom. He's like, exactly. So do you feel free when you're syndicating? I'm like, no, I have like little bosses whose money, they gave their money to me, and now I have to be responsible. And
Absolutely.
They're going to question all my decisions, all that kind of stuff. So for me, owning ourselves has just been the right decision. It's a slower path for sure. For a lot of people, syndicators can grow a lot faster because they're raising money. But for us, it's 100% our own. And I don't have to worry about my mistakes are my own too. And all my gains are mine. So it's a win-win for us.
Yeah. Well, you're right. It is a slower grow. And for some people, they feel like they need to be part of something big. I got to get 50 units or a piece of 50 units. And what I hear you saying is it doesn't need to be that big. I mean, and I know the numbers at 12 units in your area are not small, but even in other sections of the country, it could be a 2, it could be a 4, it could be an 8, it could be a 12 unit place to be able to lay that foundation to get somebody there. So I guess for somebody who's wondering, how in the world do I even get started? Or, I've been in single family for some time. How do I go to a 4 unit? How do I go to an 8 unit? I guess lay that out. What are the big things that somebody needs to be mindful of if they decided, hey, I want to own it all myself? Doesn't necessarily mean you have to manage it either. So maybe touch on that as well, and probably prefer you don't. So maybe tell me a little about that, where somebody starts.
So if you haven't invested really at all before, the house hack is really probably the easiest way to get started, because you can either buy a single family or you can buy a 2 to 4, live in one of the units, You can get FHA financing. I know 2 to 4 or 3 and 4 units get a little bit more tricky with the qualifications for FHA. Right. So anyways, the house hack is really the easiest way, because if you've got minimal cash to put down, you can at least buy something that you think you can improve, add value to, and sell it within that 2-year time frame. Now, I know a lot of people are impatient, so this is part of the reason why they syndicate or they do all this creative financing and things. I think really what you need to look at is, what is my risk tolerance, right? So a lot of people, if they haven't started in real estate, I would never recommend that they go and they get 100% financing on some crazy rehab flip, because the margins are super tight. And unless you have a really good rehab team, you can lose that thin margin very quickly. So house hacking is the best way to get started, where you just buy a house or a 2 to 4 unit, and you live in one unit. If it's a house, you obviously want to sell it after a few years to trade up into something bigger. For example, I'm still a renter. I own 46 units in San Diego by myself, and I still rent. So that, just to give some perspective. And then if you've already been an investor, in terms of you already own some homes, or maybe you own a couple duplexes or something like that, the kind of BRRRR method is really the way to go. It's like the buy, renovate, refinance, repeat model. So that is how we grew our portfolio. We went from one house, then to partners on like a 6-unit building, partners on a 9-unit building, got rid of the partners, bought like an 11-unit building by ourselves. So we kind of did that BRRRR method. And that's really the way a lot of people grow, because the cool thing about that is that you can grow a little bit more organically, meaning that you can use the cash from the properties rather than worrying about having to make more money from your job, your earned income to buy, because most of us can't save up that much money to keep buying properties every year just from our income. So the fastest way to do it is by trading up through that BRRRR method. So that's what I would recommend. And you touched on this in terms of management. Well, since I owned a management company, I will tell you, I don't even manage my own properties.
Yeah, I was wondering.
Why?
Yeah.
Because it's a big headache. And because I look at the ROI on my time. Yeah. Is my time best spent with tenants complaining, renting units, ordering, calling vendors to get repairs done on my property, doing all the bookkeeping? No. In fact, my husband's asked me multiple times, Krystle, at what point do you think we'll take the management in-house? And I'm like, I don't think I ever will. Like, you just could not pay me enough to do that job anymore. Yeah. Like the 5 or 6%, whatever that, property managers are charging, believe me, that's well worth it. Well worth it. So I would never recommend managing your own units. I know some people, when they start small with a house or a duplex or something, they might say, okay, well, I want to learn the ropes and I want to manage my property for a little while. Okay, fine, if that's what you want to do. But there's a lot of liability in that too. So the legal side for me is enough for me to pass it off to a property manager.
From 2014, when you bought that first one, to today, you've learned a lot. You've gone through a number of things in that process. Tell me, what are the biggest lessons you've learned in the process of buying and owning apartments?
We've always had a goal. So I think what you need to start with is your goals and how you want to achieve them, and make sure that they're realistic. I know that there's, some people like a Grant Cardone might say, have goals so big that you can't even imagine, and for me, I don't like that idea of feeling like I'm not going to hit my goals. So I think having a more realistic goal. So for us, it's always been buy one property a year. So a couple of years we've missed, but some of the learning lessons that we've had along the way with properties is, for one, stick to what you know. Because one of the things that I've found real estate investors do is, good markets make us feel like geniuses, right? Like, correct. When the market's hot, the way it's been for pretty much the last decade, you feel like a genius. Like you could do no wrong. You're like, oh yeah, I could be a developer. I got this down. I can buy retail properties. I can do all this stuff. I've learned that lesson the hard way. I've lost plenty of money trying other things. So that, I like that quote. It's true. And it helps me to get over sometimes when we've made mistakes. Is sometimes you win, sometimes you learn. Yeah, right. So those learning lessons usually come at a cost, and a lot of times they're monetary, especially when it comes to investing. So the biggest lesson that I've learned is to stick to what you know. So people ask me all the time, why don't you think about doing development? And I was like, I'm not a developer. Like, I have friends who are developers, and they eat, sleep, and breathe development.
Correct.
And that's what it takes.
Yeah.
That's what it takes. And I personally don't like the idea of writing checks. I prefer to get checks, more checks than I'm writing out. Okay. So that's probably the biggest lesson is like, once you get really good at this, don't think you're a genius and go do something else unless you're willing to take that risk to lose.
What's your investment philosophy? I guess you see a lot of opportunities, but what turns an opportunity into an actual deal for you? What do you identify to make it a deal?
So that's changed over time. And that's
Sure.
why, a lot of times I say, some of the big investors, I always pick on Grant Cardone because everybody knows who he is.
Sure.
So for example, if you're getting started and you're trying to use like Grant Cardone's methods, it's like, no. Grant's practically a billionaire. So what a billionaire does as a strategy is completely different than what like a little guy like even me would do. So when I first got involved in real estate and we were buying properties, I didn't really care so much about cash flow. I cared about growing my capital. So I only looked at opportunities where I could grow my capital. So I would reinvest all the money back into the properties to improve it every month. And then I would count on that capital growth when I sold, so that way I could buy a bigger property.
Mm-hmm.
So that's what I did in the beginning. Then once we finally kind of got enough capital, the building that I bought when I changed my strategy was a 30-unit building. So I took a 9-unit and a 7-unit building in kind of like a hip and trendy neighborhood in San Diego. And I sold those and I traded into a 30-unit building and more of like a C neighborhood. I would say it's more C plus though, that didn't have as much work to do. Now that was all about cash flow. Yep. So I get about a 9%-ish return every year on that property. And I count on that cash flow, and I can count on that cash flow. So now when I buy, I'm buying for cash flow because now I can get that cash flow. I already know that I can increase some equity, but now I'm playing with real numbers, right? So when you sell a house, to make $500,000, that's really good, right?
Correct.
So a lot of times you're probably making $100,000, $200,000, and then you go try to trade up, like I bought a 3-unit now, but once you trade up enough, you go from 16 to 30 units. You're like, okay, now we're talking. Like now I have something I can get excited about.
Right.
Now I'm cash flowing 5 digits, a month off of this one property. Then we still did the, improve the property, raise the rents. Yep. I refinanced, pull cash out, went and bought another property. That was the 12-unit building that we bought last year. So that's my strategy now, is looking for cash flow where I can add value, but also I have to have cash flow.
What I heard you say in between that was, and you said it earlier, know what your goal is. You have to know what it is that you want to accomplish. And then it's about finding a deal inside that allows you to accomplish your goal. So early on, it's about flipping to raise your cash level. And then then it became about employing that cash for cash flow purposes.
Yes, exactly.
Tell me, how are you, when you've refinanced, when you're putting new loans in place, how are you borrowing in today's environment? What type of loan, what type of structure?
Each of us have a different outlook, and we all have to take our own calculated risks. But in terms of what I'm personally doing is I do feel confident that rates will come down. So for me, what I'm doing, and for a lot of my clients, we're doing the shortest term fix that we can. So I'm doing like a 3-year fixed because I want the lowest prepayment penalty.
Yep.
So that I can refinance whenever the time, the opportunity arises, which I feel is going to be in the next year, maybe year and a half or less. So I'm getting a 3-year fix, lowest prepay as possible. Some of our lenders have no prepay. And that's my focus, is just basically getting the cheapest money I can right now with the lowest prepay. So that way I can take advantage of opportunity when it comes.
Yeah. Tell me, what are you most excited about this year?
This year, a couple things. I'm right now, the building that we want to purchase this year, I already know is going to be smaller. And that's why I say just know your goals and kind of like be realistic. So we're looking for like a smaller deal that we can add ADUs. So I want something with like garages where I could add a couple ADUs above and then maybe go back and convert the garages to ADUs too. That's where I'm seeing the most opportunity, at least in the multifamily market, especially because cap rates haven't gone down as much as interest rates have gone up.
Right.
So if you're looking for the opportunity for cash flow, it's tough in this market, right? So you have to look for ways to force equity and increase cash flow, and ADUs are probably the easiest way to do it. So if you're in an area where that's happening or they have that, that's the best way. So on the investing front, I'm excited about that. And then the other thing is that I've been working on a project for a long time, since 2019. I started working on this program that I wanted to do to help people, like a course on helping people to invest, not syndicate, not do creative financing, help people to invest on their own, whether it's on their own or with a partner to get started, because you do what you got to do to get started, to get in the game, so to speak. Yeah. But that's the thing that I'm the most excited about, and that is my big project for this year. So.
Oh, that's cool. Yeah. Tell me, what's one attribute or habit you possess that's had the largest impact on your life?
I would say the biggest. It's funny because I'm not a salesperson, and this is one of the things that I think is important for people to know that want to get into real estate. I think one of the things they think is they have to be these ultimate salespeople. I'm not a great salesperson. I'm just not. But what I am is I'm super persistent. So if I want something and I don't get it the first few times around that I try, I can keep going. Like I have no problem. As much as I don't like getting rejected with sales, right, I can keep failing until I reach my goal, until I figure out how to get something done. So I know how to ask questions. So I'm not afraid to ask people for help. Yeah. I'm not afraid to ask people for advice. I know that I need to ask the right people, right? Like I'm not going to ask my grandmother for investing advice, for example. Yeah. So I think just being persistent, not getting, not feeling like, I failed and I can't do something, just to kind of keep going. Right. And then also being super helpful. So I feel like that's the reason why people have given me the advice, or they're kind of like secrets or things, is because I want to help people, and in turn, they want to help me. And I think that's human nature. So I always think first, how can I help you? And then I know you're going to want to help me.
The law of reciprocity.
Yes.
Yeah, no, that's great. Let's do this. I want to move on to what I call the final segment, the final four. What do you think holds most passive? So we're going to passive here. What do you think holds most passive investors back from hitting their personal next level, whatever that happens to be?
Yeah. So passively, I don't really think any investments are passive. And so I think when you kind of get that idea, because there's a lot of real estate people who really are selling these passive investments, I say they're almost passive. So I think the thing that holds a lot of people back that are passive investors is making that leap to transition over. Because if you're passive, if it were me, I would take that opportunity to learn everything I could about that passive investment. How are they operating? How are they managing? Yes. What are some of the strategies they're employing? Asking these questions, so that way you can take those skills and move them into you being a more active investor. And I think a common misconception is that it's going to be this huge full-time job for you as an investor. Now, the truth is, yes, obviously it's more work. It ebbs and flows. But it's really the heaviest when you're finding the property and when you're going through the negotiating process. Once you're done with that, you hire your management company, you start implementing your renovation plan. It's a little bit more work, but not as much as when you were purchasing. And eventually, like I probably check my investments an hour a month. That's about how much time I spend. Yeah.
No,
my investments are almost passive.
I love that, because it strengthens you in two ways. One, it allows you to go into a more active role if you want to do that. But no matter what, if you want to remain passive, it strengthens your ability to be a passive investor, your ability to understand at a much deeper level and make better decisions for how you invest in the future.
Yes.
Yeah,
absolutely.
No, I love that. What are you passionate about outside of real estate?
Well, we were talking about that a little bit before we jumped on. Yeah. I have 2 toddlers, so I don't know when I'm going to be able to have other passions besides my kids. But so my girls are 3 and 4. And I think, prior to having kids, our passion really was traveling. Like traveling is one of my favorite things. Traveling with 2 toddlers is not a vacation.
No.
So I'm waiting. I think another year or 2 will be good to go. We're doing some traveling this summer, but really I would say my passion outside of real estate is traveling, and really it is sort of inside of real estate, but I do love it, is helping people. Yeah. I don't know what it is. I don't know if it's just like a female thing or if I think it's somewhat of a human thing, but I really get joy out of helping people and helping them to achieve things they didn't think were possible. And so that's why I've been in real estate for as long as I have. There's always like new adventures and new things to do. But also I love helping people, like showing them that, look, I started when I was 19. I came from nothing. My parents taught me nothing about money or investing or anything. I had to figure it out all on my own. So if I can do it, anybody can do it. Just, what do you want to prioritize?
That's right. What's your favorite book?
I know this sounds cliche, but it is. I probably read it once a year just because I love it. I've read Rich Dad, Poor Dad probably 7 times. I'm not a super sophisticated reader. I don't read a lot. That's why I love that book, because it's so like easy. It's such an easy read, and his storytelling is just right on point for you to get motivated to take control of your financial future, invest, whatever it is. But his stories are very motivating and super easy. Like, I feel like my toddler could understand the story. That's what I love about it.
Yeah. What's your favorite way to make an impact in the community?
Really, what I want to do is to teach people better financial education, like to show people how to take control of their finances, because it's something I think most of us just, get out of school, we go to college, we go get a job, get a salary, contribute to our 401k, and you just live this kind of very mundane life. But if you want more from that, you can certainly do it. It just takes a little bit of creativity and some I think you've got to be dedicated, you got to be committed, but it's definitely possible.
The Maverick Vault, we launched this year. It's a collection of resources available to you, our listeners. And Krystle, you're making a contribution, a deal analyzer to the vault. Tell us a little about that.
Yeah, so that deal analyzer is what I use when I'm looking at any potential investments for me. It can be a little bit maybe scary looking at first because there's a lot of information on there. But the first tab is basically all of the basics of like the current operations and like the property that you're looking to purchase. And then the second tab kind of goes into like a 5-year outlook of what the property, how the property is going to perform if you can, execute on your plan. So for me, that helps me to identify what my max purchase price is, what I can possibly trade out of it 4 and 5 years, because I did mention I'm like more of a long-term investor, but I'm not like a 20-year holder. I'm probably like 5 years max, trade up into something larger. Like my goal is to own 100+ unit buildings because you have economies of scale. It's much easier. So this will help you to kind of look at your 5-year out plan, identify what the max purchase price is, budget for all your renovations, make sure that all works. So that's what I use it for. And that's what most of my clients do as well. We model that for our clients all the time with financing. And they usually really appreciate that because it gives you a ton of information and you don't have to use a calculator. It's all in there, all the formulas, all of that's in there for you.
Wonderful contribution. Appreciate that. You guys can get it at www.themaverickvault.com. Krystle, for people who want to find you, they want to follow you, they want to connect with you, they want to connect and learn about the podcast, what can they do? Where should they go?
So the easiest way to find us, we have a website. It's called getinthecashflowgame.com. We also have Instagram as getinthecashflowgame.com. And then you'll see links to our personal stuff from there. We're probably the most active on our personal stuff. I talk a lot about tips and tricks for investors and things like that on my Instagram. That's where we're super active.
That's terrific. You've got a wonderful story. It's an amazing level of experience, what you've gone through. Like you said, 19, having to figure it out, getting into the world and swimming with the sharks. And I love your ability to go through, trade up out of the single family and then trade up out of smaller multis into bigger multis, and the path and where you're headed, as you said, want to get into a spot where you can own 100+ units because of the economies of scale. And one of the things I think I like best about you is your goals. And you talked about that early on, knowing your goals, because then you can figure out what strategy, if you know where you want to go, you figure out, it's much easier to figure out how to get there.
Yeah, absolutely. And you know what? I learned that. I think we all learn things the hard way. So in my 20s, that was like the learning time where I had no goals. It was just like, I want to make a lot of money. Like that was it. And then I learned quickly that that's not getting me focused. So, it's a learning lesson, and I'm always learning. I feel I'll be a learner forever, but yeah, it took time to get there. And hopefully this will help someone else who's in that position right now to get a little bit more dialed in on their goals.
I'm certain of it. All the links that Krystle just mentioned are below in the show notes for you guys here. Krystle, thanks so much for your time.
Listeners, pat yourself on the back.
Thanks, Neil.
Because it made
Thanks
it
for
to
having
the
me on.
end of the show, and most people never finish what they start. If you receive value from today's show, be sure to share it on LinkedIn, your Facebook page, or your social media platform of choice. Subscribe to never miss a valuable episode in the future. And if you found value in today's episode, give us a thumbs up with a positive review. If there's a particular topic you'd like to hear about, well, I want to hear from you. Shoot me a message on LinkedIn. The link to my profile is below in the show notes. You can connect with me there for more valuable content.